Devs are the unsung heroes of the crypto world and play a critical role in its success. Justin Florentine is a senior protocol engineer for Ethereum. He provides an insight into his workday, including the challenges of working across different global time zones and the importance of keeping up with the Ethereum roadmap. Florentine highlights the difficulty of the job and the need for a good work-life balance. However, she also emphasizes the fulfilling nature of the work and the opportunity to be surrounded by geniuses. This article offers an interesting insight into the life of a dev in the cryptocurrency industry, particularly at Ethereum. Through an interview with Justin Florentine, a senior protocol engineer, readers get an understanding of the day-to-day of a dev and the challenges they face. Florentine explains the responsibilities of a dev, the communication platforms they use, the average hours they work, how they make decisions, and more. He also gives advice to those who may want to become a dev in the industry. The article offers a unique perspective and provides a better understanding of the work that goes into cryptocurrency development. Whales have been selling their Ethereum ETH recently, which could have a negative impact on the price. However, retail and staker interest remains strong. The number of validators on the network is increasing and the revenue generated by them is also growing. Additionally, Ethereum has a negative net issuance which could potentially increase the value of the cryptocurrency in the future. This article suggests that despite large holders of Ethereum selling their ETH, retail and staker interest remains strong. The high MVRV ratio and negative net issuance are likely reasons for retail investors to remain interested in ETH, as well as stakers that are earning revenue from validating transactions on the Ethereum network. The increasing fees paid on the network and the growth in the number of validators also suggest that Ethereum remains a popular choice among investors. Bitcoin's market is showing resilience in the face of investor anxiety on Wall Street. BTC's volatility indexes remained flat, while the Cboe Volatility Index and the MOVE Index have both jumped to one-month highs. Bitcoin is not participating in the global volatility repricing, suggesting mainstream investors are still not interested in digital assets. Markets expect a rally in BTC ahead of its fourth mining reward halving in March 2024. They are responding to upbeat economic data and the possibility of a hike in the Federal Reserve's benchmark Fed funds rate. This article provides an intriguing look at how the Bitcoin market has responded to volatility in traditional markets. Despite Wall Street's fear gauge, the Bitcoin Volatility Index has remained flat near the lower end of its 3-month range. This is indicative of the fact that traditional investors have taken little interest in digital assets, and that Bitcoin is charting its own course. The article also touches on the expectations of a new bull market before the fourth mining reward halving in March 2024. Additionally, it looks at the jump in yields of 2-year Treasury notes and the dollar index. Overall, it paints a picture of how investors are viewing the current state of the markets. Since the launch of the Ethereum Beacon chain on December 1, 2020, only 0.04% of validators have been slashed, according to an Ethereum core developer. The developer also provided 4 best practices to reduce the risk of slashing. This often involves the removal of validators and slashing a portion of their staked ETH. Most slashings have occurred due to attestation violations and about 13.9% of the ETH in circulation is currently staked. This article provides a comprehensive overview of the Ethereum network slashing process, and the risk of being slashed. It provides insight into the low rate of slashing since the launch of the Beacon chain, as well as best practices for reducing the chances of being slashed. It also explains the 2 types of slashing, and how the majority of slashings have been due to attestation violations. Additionally, the article provides data about the total amount of Ether staked in the network, and the various ways that Ether can be staked. Overall, this article provides a good overview of the risks and rewards of staking Ethereum. Yassin Mubarak has discussed David Schwartz's tweet on Twitter. The tweet suggests Ripple may be tempted to walk through a door and shut it behind themselves. Mubarak suggested 2 interpretations for this tweet. Either Ripple will take the case to the Supreme Court, or they will end the lawsuit by getting XRP acknowledged as a non-security asset. Previous comments from Ripple executives have indicated they would prefer a clear set of regulatory rules from the SEC for the whole crypto space. If they lose the case, they may leave the US for a crypto-friendly jurisdiction. This article provides an overview of the recent comments made by Ripple's executives which highlight their desire to secure a regulatory framework for the crypto space. Yassine Mobarak made an interesting comment on David Schwartz's tweet by suggesting two interpretations of what he could mean by walking through a door and shutting it. It is unclear exactly what Ripple's intentions are, but it is evident that the company is committed to securing a positive outcome for the crypto space.